how do we identify a key level? Anywhere the market anywhere the market moved in a rapid move following your trend, like it's a downtrend. The point where the market experienced a rapid move going to the direction of your trend, that's a key level. Now you must know the beginning of that move, like this move here that went down with our trend. It began from this point here. So I mark this point here, like when the market comes back here, there's a high probability of experiencing the same rapid move as it happened here. As you can see, this is the biggest candle that the market printed over a few days. I think since this year started, this is the largest candle the market has printed. So what we are going to do here is to look this area where the move that printed this big candle or made this big move started. Where the market started to move, that's where our key level is. So always you're going to mark this level as your key level. That's the first way of identifying and an easiest way of identifying. Like now the market from this point, it experienced a rapid sell. So it means when the market comes back to this area, we are expecting to see the same rapid sell from this point. And that's what happened. As it's a downtrend, when the market comes back to this point, we experienced a rapid sell of more than 300 pips from our key level. That's how we identify a key level. A second way to identify a key level is by looking where the financial institutions and big banks have placed their pending orders. There's a special website where they list where a certain financial institution or a bank has placed its big orders in the market. So those areas, once the market reaches, they must show a certain reaction. So that's how we identify a key level also. Tomorrow I'll show you which website is that the market that you can see those key levels or those big orders by the banks that you can identify, and you can see where can we identify. So tomorrow, I have seen your question, bro. Tomorrow I'm going to explain now this concept of key levels, and I'm going to explain in a way of supply and demand. I'm going to, I don't know, they call it support and resistance, but I like to call it supply and demand because the qualities of supply and demand are more well than the qualities of support and resistance. So tomorrow I'll specify more on how to mark these regions and the candles that you consider while marking these regions and the time frame to consider. So today I'm just giving you a general concept on steps on how to analyze your markets. So tomorrow I come with a website that you will know where to look those big financial institutions, they have placed their orders, so that you can know this is a key level where the market is likely to experience a reaction. So like this, when you look at this point here, this area, where the market began this rapid move of selling. So once the market comes back to this region, we are expecting to see the same move to the down as it goes with our trend. Okay. Now the same things apply to an uptrend. Let me see an uptrend here. On an uptrend, it's the same picture. Just know your trend. As you can see this picture here, the market is very clear. It's an uptrend because it creates a series of high highs and lows, high highs and lows and high highs. All these highs, they break the previous highs. Okay, so as you know, this is your uptrend. Now you must identify the key levels. The key levels are those areas where the market, once they reached, they experienced a rapid move to the up, going to the direction of your trend. So the same picture we're having here. When the market reached at this point, we saw this push to the up. So we expect when the market comes back to this area, the same thing might happen, a push to the up. So once you mark your key levels, like tomorrow I'll show you based on supply and demand, those areas, how to mark them and how to identify them correctly. But also, I'm going to give you a website where to see those financial institutions and big banks where they placed their orders. Knowing that the direction of the trend, knowing your key levels, now you will make decisions based on what the market has shown you. Now I repeat, on the uptrend, make sure you take buys. On downtrend, make sure you take sells. Okay. Now every time the market moves, it prints this series of things you see here. This like sticks. You see these things here. They called candlesticks. These blues and reds you see. Once they are up, another they are down, ups and down. These are called candlesticks. And these candlesticks, they speak a certain language once they are formed. Each candle you see here, it speaks a certain language, or it has a certain meaning behind it. So every time a market moves, it prints this series of candles. And once these candles, they speak, they give us a certain indication that the market is either going up or it's going to go down. I think I'll share a book with Osage and it will share it in the group. You guys are going to know how to figure out these candles, because I cannot explain them single one by one. I'll just give you those main ones. There's those candlesticks, when you see them, it gives you an indication. Like this candle here, let's call it an hammer. This candle here. Let me mark it. Huh? Hey, yo. I don't know why it's doing like this. Oh my God, oh my God. See this candle here, this candle here. This candle speaks a certain language. Once you see this candle on the market, anytime the market prints this candle on a higher time frame, like this time frame is daily. I don't know if you guys understand when I say time frame. Every time you trade, the market moves in different time frames. Or you can view the market or the chart in different time frames. And the time frames are from monthly, weekly, daily, 4 hour, 8 hour, 3 hour, 2 hour, 1 hour, 30 minutes, 15 minutes, 1 minute up to seconds. So you view the market according to these time frames. When I say time frame, what do I mean? For example, here I am on my, when you see this 1 day, it means it's a daily time frame. What's the definition behind it? It means for this one candle to complete its formation and to be closed and form another candle, it needs a 1 full day, 24 hours. You understand me? When I put in a daily time frame, it means for this one candle to be printed and complete and close to open another candle, it takes 24 hours, 1 complete day. When I go to 4 hour time frame, what's the definition? It means for each candle to complete, be formed, each complete and be formed, it takes 4 hours for 1 candle to be formed. I hope now you're getting my point. When I put a certain time frame, for example, this is a 4 hour time frame, it means each candle here, it takes 4 hours to be formed. When I go to another time frame, maybe 1 hour, the same thing. For this one candle to be formed, it takes 1 hour. For example, now we see this candle is still open. The price is here. And it's in your country, I think it's 8:59. So when it's 9:00, this candle will be closed and we'll see another candle being opened. As you will see here in a few minutes to come, I mean in a few seconds to come. That's the definition. Every time frame you're moving in, it means that's for that one candle to complete, it takes that time frame that you are on in. For example, you have seen here, the market has closed, it's another hour has opened, and the new candle has been opened here. This has closed. That's the definition. So every hour or every 4 hour or every day, it means that candle on that time frame, that's what it takes for it to be complete and to open another candle. As we have seen here, that this candle has closed after we hit, I think in your country, it's 9 o'clock. So as it has hit 9 o'clock, a new candle has been written. That's the definition of what we are saying here. So the time frame we are using, it defines each candlestick that you see on that chart. Okay? Now, what other thing we're going to consider on these candlesticks? I was explaining the chemistry behind the candlestick. Candlestick language. Now, this candlestick, I'm speaking from experience, not from any knowledge or not from nothing I've read or somewhere, because not everything you read is correct. I'm speaking from a 5-year experience of trading. This, anything it forms, any pattern this candlestick forms, you must regard it on a higher time frame. So once you see a certain candlestick on a time frame that is higher, like daily, weekly, and above, it portrays a certain critical and very important information. For example, when you see it has closed this hammer on a daily time frame, it means the market is going to shift from moving down, now it's going to go up. So automatically, once the market closes this candle on a daily time frame, this candle closes, pop, then it's another day has opened. You can confidently buy and put your stop loss below the previous, below that day candle. I don't know if you get my point there. If you have seen this hammer candle on a daily time frame, don't stress yourself. Place a buy, put your stop loss below the previous day candle. That's a direction that the market is going to buy. That's for an higher time frame. Don't consider these candlesticks on those lower time frame, because always they don't speak the truth. Always the market moves with the higher time frame. So you see this candle, put your buy, put your stop loss below the previous day wick, because this in a candle we call this a body, and this wicks. This you see coming here and coming here. These are wicks, and what you see here, it's a body. So what you're going to consider here is what the market is forming. This candle formed, what is it speaking? When you see this candle like this hammer, it speaks the market is shifting from going down, it's going up. So what you're going to do, place your buy, put your stop below this previous day low. And this is, I'm repeating again, consider it from the daily time frame and above. I hope now you're getting my point. That's for the time for the candlestick definition. The other candlestick you can see it's this, we call it this is called a doji or a star. When you see this candle, it means the market is in a phase of indecision. It's not neither going up, neither going down, or the market has failed to go up or to go down. That is, there is equal probability of buyers and sellers. They are equal in power. So that means there is no an accurate decisions on where the market will go. So what we are going to consider there is where the trend of that market is going at that time. Okay, I'll send a book to Sagefio, and he'll share it to you, and you'll see different types of candles and what they mean. So that's the definition of these candles, and getting the meaning. But much first consider where the market is going and the trend first, then in the key level. Once you see this dodgy candle on a key level and it's an uptrend, then you're going to buy. Or you see this candle reversely on a downtrend and it's on a key level, you're going to sell. So that's how you regard these markets and how to trade them. So first thing first, know your trend. Second thing, mark the key levels. The third thing, know what candlesticks are formed in an higher time frame. Forget about these lower time frame candlesticks. Most of the time they are lying. So focus much on these higher time frames. I don't know if you guys have the question. I can open that session and listen to it if you have any question at this moment.
Guys, so I'm sure you guys have witnessed. Ezra is really spitting. So I've seen a couple of you saying that he's moving too fast, but yeah,
Yeah.
I think he got a little down so that everything he's describing is well
Yeah.
clarified. But then if you
So
do
again,
have,
I can just say, bro,
yeah, bro,
I can just say they
yeah,
should. I should tell them to forgive me a little bit, because I'm not used to teaching beginners. I'm very sorry about that. it's been
Very
like
true.
an whole year. I have not taught someone who is beginning in trading. I always teach those people who are already trading, just want to get the strategy on using. So I'm going direct to strategies and everything. So wherever you didn't get my point, you might ask a question, then I'll repeat it.
Exactly. Exactly. Yeah, it'd been a while. It'd been a while he taught beginners, so you guys should pardon him. He's already made a disclaimer. So yeah, that's why he has opened it up for questions before he decides to proceed with the next this one topic. So please, if you do have any question, just unmute yourself and talk to him. Talk to us. We are here for you. Ezra, they said you are cooking.
Not yet, not yet, not yet.
Okay,
We're about to
so
get there.
Ezra, yeah,
Yeah,
thanks so much for your lecture. Yeah, it's good. I think I have a fair idea of how this things works, but I've not really
yeah,
understood it to this level. You've really taken your
yeah.
time to explain to me the upstream, the downstream, and the resistance level. I think
Okay.
I've been trying to get it. Today is the first time I've gotten it.
Oh, okay, okay,
So I'm just
okay.
praying that
I've got the
I'll be able
question.
to know how to do the buy and sell, which you said you will let us know tomorrow. So
Okay.
we're
About
good.
about the buying and selling, I'll explain tomorrow. But I'll
Okay.
just repeat on the part on knowing an uptrend and a downtrend and those key
Yeah.
levels, support and resistance.
Yeah. Thank you.
Okay. Another
Hello.
question?
Yes,
Hello.
Yes, yes.
please.
Please, you were talking about the doji and then the first even
Yeah,
in a
the
hammer. I
candlesticks.
wanted to know if there's any other signals that we have to know.
The, okay. Starting with that, there are a lot of candlesticks that are in different names. Every candle has its own name and its own meaning. That's why I said I would send a book to Osagefio and he send it to you. You read on those candles and knowing what they mean one by one. But there are a lot of candles. What I
Okay,
just
okay.
explained, candle that it's obviously seen most of the time. So the rest I'll share it with you and you get it.
Okay, okay. Thank you.
Hello.
Yeah.
Hello.
Yes, yes, sir.
Yeah, please, about the trend of the market.
Okay.
Please, I've been hearing something. I want to ask about it. I've been hearing break of structure and change of character. And I want to ask if you can explain
We
those
will
ones for me.
we get that point tomorrow on those change of characters and
Oh,
break of structures. Yeah, it's
oh,
another
okay.
concept.
Thank you.
I'll get to that tomorrow. Let's go slowly first, because once I start talking of those things, now people will run away.
Okay.
Go step by step. Yeah.
Okay. Thank you.
I
That's
hope
very
I have no other question. Let me now repeat on those out one to identify the trend. As I
okay.
said previously,
Ezra.
yes, sir.
Yeah, someone had a question in the chat.
Okay.
He was asking, please, will you just mark any candlestick or some specific candles? I think that question is in regards to when you were talking about the key levels.
Okay.
Yeah.
Okay. I said about that on how to mark those key level and which candlestick to mark. I'll explain tomorrow. I answered this.
Oh, okay.
Okay, I
Okay, sure.
answered this. I'll explain
Uh,
because I don't want to feed a lot of things. They'll forget fast. I know I've been teaching for a long time.
that's very
So
true.
people
All right.
forget easily when you feed them a lot of things.
That's very true.
Yeah. So we want to move it slowly. So let me repeat on this how to get to know the the trend. I said every time you see the market creating an high, breaking the previous high, and once it returns to form a low, this low does not exceed the previous low. It means the market is uptrending. So this it means that the market will be creating series of highs and high lows, high highs and high lows. All these highs are created, they will be breaking these previous highs. And the lows being formed, they will not exceed these previous lows. So once you see the market going up, going down, and going up, once it goes up, it breaks the previous high it created. And when it comes down, does not exceed this previous low. And it means the market is uptrending because it's creating a series of high highs, high lows, high highs, high lows, and high highs. That it means it's an uptrend coming to that point. And once you see the market is breaking those structures going down, it means it creates a low. And once it creates a high, this high does not exceed the previous high. And it creates another low. This low breaks this low. So it means the market is moving high, low. This low, it's a new low, breaking the previous low. And once it creates another high, this high does not break this previous high. So the market is going high, low, lower high, lower low, lower high, lower low. So once the market is creating this series of lower highs and lower lows, it means the market is downtrending. So once you get in your markets or you get in your chart, all you have to identify is what is the market doing. Is it breaking structures going up or is it breaking going down? Or is it not breaking any highs or any low at all? And I said, once the market is not breaking any high or any low, it's consolidating. So it means we don't trade here. We only trade when the market is breaking high highs and high lows, creating an uptrend, or the market is breaking highs and lows, creating a downtrend. This is only when you trade. And we trade on this downtrend by selling and on this uptrend by buying. We buy this, we sell this, we don't trade here. I had someone speaking. Yeah, question, sir?
Yeah, Ezra, we didn't get you in the end.
I had someone speaking, that's why I stopped. Okay.
Oh, okay. Actually, I heard someone trying to speak, but
Okay.
the person
Let me
has
continue.
unmuted himself. Yeah.
What I was saying at the last year is that here on this direction going up here, when the market is breaking highs and forming lows that are not breaking the previous lows, that means the market is uptrending. On this move, we buy. But on this move of going down or the downtrend, the market is breaking lows and forming higher lows and breaking new lows. It means we are looking for sales on downtrend. And when the market is consolidating, either it's not uptrending or downtrending, it's just consolidating. Here it's advised not to trade. That's the concept I was saying at last year. So we're looking for buys on uptrend. We're looking for sales on downtrend. We don't trade consolidation. This means the market is not uptrending or downtrending. We don't trade here. We only trade when it's uptrending, when we are looking for buys, and when we trade when it's downtrading, when we are looking for sales. I hope now my point has been gotten well. How do we identify these trends? We are looking what the market is creating. Is it creating highs and lows, breaking the highs from the above, or is it breaking these lows from the below? It means once it's creating lows, it means it's downtrend. Once it's creating new highs, it means it's uptrending. That's the concept I was trying to give there. Is there another question about where to buy and where to sell? I'm going to give it to you tomorrow. I'm going to explain tomorrow on what we are going to do. So that's what we are going to identify tomorrow. Tomorrow, I'm going to know the potential area to buy, the potential area to sell, where to mark your potential area or the key level, either supply or demand zone, and you're going to do, what you're going to do.
Okay. So guys,
Yeah.
yeah, as you guys are saying, he really cooked. Actually, for me, yeah, I've been trading for a while, but this session was also an eye opener for me. I got to learn a couple of stuff. You get it?
Yeah.
Yeah. I mean, Ezra has been trading for 5 years, so you guys should know the amount of expertise he has is way above me. You get it? So I'm also a student in this. So as you said, more of it has been scheduled for tomorrow. And considering how this one early you guys are in your trading journey, he doesn't want to bombard you guys with
Yeah.
a lot of knowledge. You get it? Yeah, he
So
can't bombard
sometimes
you.
I have a lot of information, and uh, giving out it might become hard sometimes. So I might be sorry for that. I might be giving out a lot of information at once because I have a lot of things in mind. So I'll try to take it slow as possible. And if you have any question, try to ask it as quick as you can before I move very further. I'll forget on how to explain that concept.
That's very true. That's very true. Actually, for that one, if you are someone who really have a lot of nuggets in your head, Charlie, it mostly happens, and you are no exception. So I don't understand. The knowledge in your head is too much. So yeah,
Yeah.
as you said, you need to be following closely. You get it? You need to be marking him. So if there's something that you didn't really understand, it's just a matter of what alerting him, then he answers you straight up before he continues. Okay. So he has talked about all what you guys need to know for today. And he has opened it up for questions. Actually, he's done, but he's open to take questions. And yeah, I think most of you do have questions. And me over here, we wouldn't encourage you guys to what keep the questions to yourself. It's better being answered than you trying to carry it on towards the next phase. Otherwise, if you don't get your foundation right, you are really going to struggle as a trader. You get it, and you are very fortunate to have an experienced this one Ezra over here. So please, if you do have any question, just hit him up. Okay, yeah.
Hello.
Because yes.
Please, it's not 10 o'clock yet.
Yeah, it's not 10 o'clock, 10 o'clock yet, but then you see, mm, he doesn't want to get you guys too many stuff. You get it? If he should give you all of the knowledge he's supposed to give you for today, 2 hours, although 2 hours may look like, yeah, a very good this one time to grasp a lot, but then bro, this is very practical, and this like it's money you are dealing with over here. You get it? You don't have to be
Yeah.
you don't have to be thinking of a lot of stuff at the same time. Okay, so he wants you guys to
Uh,
take it a step at a time. Okay,
Okay.
we
Okay.
Mr.
But,
Segafa, in technical analysis, this is forex. This is where trading is. So I'm trying to take it as slow as possible so that people can catch every single thing that I'm speaking. Because once I move from tomorrow on another concept, I won't be repeating what I said today. So I don't
exactly,
want tomorrow someone to be asking me the question I explained yesterday. And this is technical analysis. It's just a lot of things to do. We have to know how to mark a zone, how to to trade when the market is in the zone. We have to know the Fibonacci retracement. We have to know the candlesticks. We have a lot of things. How to mark a zone, a lot of things. How to identify a good area to buy, a good area to sell. How to take entries. We have a lot to come. So I'm trying to take as simply and slowly as possible so that we can catch up easy. People feeding people with a lot of information that tomorrow they don't even remember what we explained the last day. And I think it's very advisable for someone to go through this session again before we start tomorrow's session. Okay,
exactly.
it will be easy for me to catch up with you guys, and we're going to reach at a certain good point.
Very true, very true. So guys, we'll be sending out a recording. So you need to what stick and stay. Like I mean, you need to stick to the recording so that okay. Zoom user has a question. Please unmute yourself and talk to us. Okay.
Okay. I'm having a question here. Uh, I wanted to ask about the day trading that you are using the day candlestick and then the 4 hours candlestick and the one. You were talking. I can see that you are using the day candlestick more. So I don't know if whether we can also use that. So I wanted to ask why you don't use the 1 minute candlestick and then the 5 minute
Okay.
candlestick, but you are rather using
Okay.
the day, like one day
Okay.
candlestick
Okay.
more. I want to know
Amazing
why.
question.
Maybe if there are some
Question.
differences
I've
between
got,
them.
yeah, I've got your concept. as I explained there, I said every time frame you put, it means that that candle, respective candle, it is that the specific time frame is used for that candle to be formed. For example, once I put here, it means this is a daily time frame. It means for this one candle to be complete, it took 1 day. Now you ask, why am I using daily time frame and not maybe 1 minute or anything else? For me, I'm a day trader, and for you to get a lot of pips or to analyze and know trend easily, you must consider as big time frame, because those small time frames are just components of a big time frame. For example, this is a daily time frame. When this is today, Monday, this candle here, it's Monday, right? This is Monday. So let me do this. This is Monday. So this candle here, it's Monday. So inside here, we have few 1 hours. We have few 30 minutes. We have a lot of 15 minutes. We have a lot of 1 minute candles inside here daily. But in a bigger picture, you can see this whole day it has been red. It means it's a sell. But once you move to a smaller time frame, within this day, you can see there is a buy, then there's a sell, there's a buy, there's a sell. So why am I considering a big time frame? Because it avoids this a lot of noises. I'll be considering what a big time frame is saying more than what the small time frame is saying. Because for me to get a good trend or to know the direction of the market, I must consider the big time frame because I'm a day trader. So I'll start from the day to know where is my day going, so that I can know what am I going to do within that day. So once you know the day is a bull candle or it's a buying candle, what you're going to know is that within that day, you're going to look for buys. Once you know today's candle, it has closed with a bullish. It means the market is having a force of pushing to up. So once I go to the small time frame to look for my entries, I'm going to focus more on looking for buys. That's a simple concept of why I'm using these big time frames. And it gives you a big picture of the market structure more than this small time frame. Small time frame has a lot of noises. They have a lot of noises. As you can see, this example I've given you, the candle is showing a selling. But once you go to small time frame, you can see little buys and little buys. And once you keep on going to small time frame, again, you see more noises like ups, down, ups, down, ups, down, ups, down. But on a bigger picture, you can see only one candle selling. That's the difference between a big time frame and small time frame. So everything you see on small time frame, they comprehend to form the bigger picture of the bigger time frame. So this small time frame is for taking entries, but those big time frames are for knowing the direction and the overall trend of the market, and to know the key levels where the market has reached. So that's why we are using those big time frames. And for the big time frames like daily, so if you look on daily,
Okay.
you sorry.
Okay. Sorry, but like right now, I can understand what you're talking about. But we the beginners, do you think that we using the daily time frame will be like good for us with like our amount of money that we'll be using to trade? Because we were told to just deposit $10 into our account.
Yeah.
So do you think that we using the day
Yeah.
the daily
Now listen to me, sir. We use this daily time frame to know the direction of the market, but we do not use them to take entries. I don't know if you get my point. We always, I also trade $10. Sir Jeffo can tell you guys on my status. I always post $5, $10. I even small amount of money, but I use these big time frames to get the picture. Then for me to take a trade, I'm going to the smallest time frame as possible. For example, today, let me show you guys here what I did on Bitcoin. although it was a account, but I took my entry based. You see, this is where I took. I used the 15 minutes time frame. I marked this candle here, this here. So when market comes back to this candle, I took my buy here. Although it was a funded account and a bigger account, but still I used this one. I took this buy. I closed with 2,600 USD. I closed this one, 2,600 USD. I took my buy here. Though I analyzed in a bigger time frame, but I took the trade in a very small time frame. So for the big time frame, I just looked and see the direction of the market. But this small time frame is where I took my entry. So even if you have $5, $10, you use these small time frames to get our entries. But big time frames to know the market trend and to know the bigger picture of the market and to know what you're going to decide. You get my point.
Okay,
not matter.
okay,
Yeah.
okay. Thank you very much. I understand now.
Yeah. Please, I would like my chat to look like Ezra's own. So please, if you don't mind sharing chat color settings, not as okay. This we'll do this customization of the trading view maybe on the days to come. I'll show you guys. This is just a simple concept. I'll explain this next time. It's very easy, no problem with that. I'll share it with you guys, the charts, the colors, and everything, and how my chart is appearing. So that's the picture, and you can see on tomorrow I'll explain more on this time frame issue. Which time frame do we use to mark our key levels, and which time frame do we use to identify our small trends, and where do we take our entries? So as we go on, you'll get more concept on this time frame issue. Not the problem anymore.
All right.
Okay.
Yeah.
I hope as a gift they don't have further questions. What I'll do, I'll send that book of Candlestick. Please remind me because right
Okay.
now it's midnight here. It's almost
That's
you can
very
see
true.
12:28, and I have an meeting in the morning I have to attend to. So what I do, I remind me to send that book so you can go through the candlesticks. And in case you have anything else, we are going to catch on it tomorrow on tomorrow's class. I hope we are okay with
Okay,
that. Yeah.
sure. Yeah, very okay
Yeah.
with that.
Let me see.
So
There's a question.
yeah,
Okay.
I just like the way you analyze top down and pick the zone. If this was a trade you took,
I
then
will explain how
it
I do this tomorrow. I'll explain to you guys on how we get this tomorrow.
uh,
All right, thank you.
We'll go step by step on how to get this. Yeah. So guys, I thank you for your time. It has been nice to be with you. Let's catch up tomorrow. I'm very sorry for your country. It's behind us 3 hours. So you can on your time there add 3 hours my time here. So I must sleep and I have a lot of things to do in the office and in the morning. If you could be with these sessions in the afternoon, it would be very easy for me. But no problem with that. Let's catch up tomorrow and we are going to learn more from each other. Have a good night, guys, and see you tomorrow.
have a good night, guys. Bye.